Most investors research dividend stocks the wrong way. They find a high yield, check if it is above 4%, and call it a day. Then the company cuts the dividend 6 months later, and suddenly the whole thesis falls apart. The yield was a trap, not a signal. Today you are going to use AI to research dividend stocks the right way, not just the yield, but whether the company can actually sustain and grow it. Welcome to the AI Portfolio. I am Abdul, and this channel is about using AI tools to become a more thoughtful, more organized investor. Quick disclaimer before we start, nothing in this video is financial advice. I am not your advisor. I do not know your situation. What I am showing you is a framework. Take it to a licensed professional before acting on anything. Dividend investing sounds simple. You buy stocks that pay you money. But the research is anything but simple. You need to look at dividend history, payout ratio, free cash flow coverage, debt levels, sector context, and whether the business model actually generates recurring cash. Most retail investors skip most of this. They chase yield, and they get burned when a company with a 7% yield cuts the dividend because it was paying out 110% of its earnings. High yield is not the same as safe yield. AI cannot replace the judgment call, but it can help you ask the right questions fast. AI does not know the future. It cannot tell you whether a dividend is safe, but it can help you build a research framework in minutes, walk you through the right questions to ask, and turn raw financial data you paste in into a structured analysis. Before AI, this kind of research either took hours or cost money: a financial data subscription, a screener, a research service. Now you can do a thorough first-pass analysis in under 30 minutes using prompts and a free AI tool. The first prompt builds your initial screen. Paste this into your AI tool. I want to research dividend stocks for long-term income. Help me build a screening checklist. What financial metrics should I look at, including payout ratio, dividend growth rate, free cash flow yield, and debt levels, and what ranges indicate a potentially safe and growing dividend? Format it as a checklist with acceptable ranges and red flags. The output gives you a structured framework before you even start looking at companies. Use it as your filter. A 3% yield with 10 years of consecutive growth and a 50% payout ratio is more interesting than a 7% yield with rising debt. Once you have a candidate, the second prompt goes deep. Find the company's most recent annual report or investor presentation. Most are available on the Investor Relations page. Copy the relevant sections: revenue, net income, free cash flow, debt, and dividend history. Then say to your AI tool, I'm going to paste financial data from a company. Analyze the dividend safety. Look at payout ratio, free cash flow coverage, debt to equity, and dividend history. Then tell me what would need to go wrong for this company to cut its dividend. The last question is the most important. You are not asking if the dividend is safe. You are stress testing it. What scenario breaks it? That is the question that actually separates good analysis from surface level research. The third prompt makes it personal. Say this: I want to build a 10-year dividend income projection. Assume I invest a fixed amount per year into a portfolio of dividend stocks with an average starting yield of X% and an average dividend growth rate of Y%. Show me the projected annual income at years 1, 3, 5, and 10. Then show me what happens if dividend growth is half what I projected. This turns abstract yield numbers into actual dollar amounts you can plan around. It also forces you to see the sensitivity. What happens if your assumptions are wrong by 50%? Most investors never model this. Running the numbers before you buy is the difference between a strategy and a guess. After you run all three prompts, you have a quality screening checklist, a stress-tested analysis of a specific stock, and a personal income projection. These do not replace a full financial plan. They replace nothing at all, which is where most retail investors start. Save the checklist. Run every dividend candidate through the same screen. When you are ready to go deeper, bring the stress test output to a financial professional and use it as the starting point for a real conversation. A few things to be clear about. AI cannot access real-time financial data unless you paste it in. Always use the most recent filings. It cannot predict whether a management team will cut the dividend during a downturn, no matter how clean the numbers look. And it cannot account for your tax situation, which matters a lot for dividend income depending on your account type. These are real limitations. The framework AI gives you is only as good as the data you feed it and the questions you ask. Here is your homework. Pick one dividend stock you have been curious about. Run all 3 prompts this week. Start with the screening checklist, then run the stress test, then build your income projection. When you are done, you will know more about that stock than most people who already own it. If this was useful, subscribe and share it with someone building for income. See you Monday.